Welcome back to the Dinar Chronicle, your trusted source for real-time updates, critical insights, and breaking developments in the global currency revaluation space. If you're holding Iraqi Dinar or following the global financial recalibration closely, today's update is one you cannot afford to miss. In a stunning development that's sending shockwaves through both investor circles and institutional banking sectors, we are receiving confirmed reports that the Iraqi Dinar is now being exchanged at a live rate of $6.12 per IQD at select Chase Bank locations across the United States. This news is not only creating massive buzz, but also raising urgent questions about what this signals for the future of currency valuation, asset-backed financial systems, and the realignment of global monetary policy. Sources close to the matter, including multiple independent confirmations from Chase Bank customers, internal memos shared with regional branch managers, and digital banking screens now showing the rate shift, all point to a singular reality. This is no longer a test rate or placeholder. It appears to be a live, active exchange rate being honored as of this morning. For weeks, we've been tracking rumors, fluctuations, and trial rates appearing in various financial systems, but today marks a definitive shift. The $6.12 figure stands out not only due to its magnitude, but also because of what it implies: the full reinstatement and revaluation of the Iraqi dinar to a status many insiders have long claimed was inevitable. This moment appears to reflect a larger transition in global liquidity and asset recalibration. Analysts who've been following the Basel III framework, de-dollarization efforts, and the broader move toward asset-backed monetary systems are now pointing to this as a pivotal moment. For Chase Bank to authorize such a rate implies either federal clearance, Treasury Department alignment, or significant private tier settlements now entering a public phase. While we don't yet have official statements from JP Morgan Chase executives or federal regulators, regional bank managers and exchange desk employees are reportedly confirming the availability of the rate to verified dinar holders, provided identity and KYC verification is completed. What makes this development even more significant is the contrast between current Forex platforms and what is now being applied inside Chase branches. At the time of this report, major Forex terminals are still reflecting the traditional non-international rate for the Iraqi dinar. However, private banking systems and back-end currency exchange portals have begun updating, reflecting the $6.12 valuation. This disparity between public-facing and internal rates suggests a controlled release, possibly indicating a multi-phased rollout similar to what was rumored in prior discussions around global currency reset protocols. We've also learned that this new rate may be accessible through pre-scheduled appointments only. According to conversations with Chase Bank representatives, walk-ins are being turned away in many locations due to high demand and limited staffing prepared to handle currency exchanges of this magnitude. Customers are reportedly being asked to pre-register, complete identity verification protocols, and sign non-disclosure agreements in some cases before transacting. This is consistent with procedures anticipated for Tier 4B exchanges, and it adds further weight to the theory that this is a structured financial event, not merely a spontaneous rate adjustment. Investor communities, particularly those that have followed this journey for years, are responding with a mix of elation and urgency. Many are rushing to verify holdings, check authentication of their currency, and schedule appointments with banks that are confirmed to be participating in the exchange. Digital message boards, social media groups, and private financial networks are seeing an unprecedented surge in activity, with thousands of posts reporting successful transactions, pending appointments, and verified rate confirmations. For many, this moment represents the culmination of decades of research, patience, and preparation. It's important to highlight that this $6.12 valuation vastly exceeds most conservative estimates floated by institutional economists. Earlier, projections pegged a possible revaluation between 1.32 and 350 based on Iraq's oil output, GDP potential, and gold reserves. However, proponents of a higher rate have consistently argued that the dinar was historically undervalued and that a reset would restore parity with pre-2003 levels, adjusted for inflation, asset backing, and international agreements. The $6.12 figure now emerging suggests that Iraq's re-entry into the global financial system may be more aggressive and possibly more aligned with a gold-backed transition that many believe is already in motion behind the scenes. Meanwhile, we've observed some early institutional responses. Certain hedge funds and private equity firms are reportedly scrambling to recalibrate currency exposure. Crypto markets are also seeing unusual movements, possibly in anticipation of broader shifts in fiat value across the board. The bond markets have been relatively quiet today, but there is speculation that the Federal Reserve and IMF may issue statements in the coming hours to clarify their position on this revaluation and what it means for global monetary policy moving forward. In addition to the reports from Chase, there are early whispers that other major banking institutions, including Wells Fargo and Bank of America, may be preparing their own rollout schedules for the new IQD rate. However, as of now, Chase appears to be the first and only Tier 1 bank actively executing exchanges at this rate for the public. This exclusive rollout may indicate either a strategic testing phase or simply the result of Chase's preparation. An infrastructure which has long been rumored to play a significant role in the currency exchange process related to the dinar. On the international front, sources in the Middle East suggest that the Central Bank of Iraq has remained unusually quiet today. Their silence may be strategic, signaling an attempt to maintain stability during the transitional period. Nonetheless, reports from inside Iraq note that ATMs and banking systems are currently being updated, and some citizens are noticing digital account shifts potentially correlating with the new valuation. If Iraq's internal systems are aligning with the Chase rate, this could point toward a coordinated global revaluation effort already underway. Furthermore, there's a growing belief that this exchange activity is not limited to traditional fiat settlement. Some customers have reportedly been offered the option of converting IQD directly into digital assets or credit-linked accounts pegged to future commodity reserves. This hybrid settlement system would fit with long-standing theories about a transition to a quantum financial system, where currencies are not just fiat-based but backed by tangible national assets like oil, water, gold, and rare earth elements. For those unfamiliar, the implications of a 6.12 exchange rate are enormous. A holder of 1 million IQD would, under this valuation, see a gross return of over $6 million. Taxes, legal compliance, and banking fees would naturally apply, but the net value to individuals and institutions holding large reserves is transformational. This is why so many are rushing to confirm their access to exchange facilities and ensure their transactions are processed legally and securely. It's worth noting that this development is not entirely without precedent. Over the past 2 decades, multiple countries undergoing economic reintegration or restructuring have revalued their currencies as part of broader financial reforms. However, the sheer magnitude of the IQD jump, coupled with the confirmation from a globally dominant bank like Chase, marks this as an exceptional case. If validated by further international response, this could set a precedent for similar revaluations in nations like Vietnam, Zimbabwe, and even Iran, countries whose currencies have long been suppressed due to sanctions or instability. One of the most immediate questions facing currency holders is simple. What comes next? Will this rate hold, rise, or adjust downward in the coming days? Will additional banks open up exchange capabilities? Will regulatory authorities intervene or provide guidelines? These questions remain unanswered for now, but the window of opportunity appears to be open for those who have prepared. We are also seeing a massive influx of queries from financial advisors, CPAs, and estate planners who are now being inundated with client questions about asset protection, tax implications, and reinvestment strategies post-exchange. This kind of sudden wealth event, especially one that could elevate individuals into high net worth categories overnight, requires serious financial literacy and responsible planning. Professionals in the field are urging individuals not to act impulsively, but instead to seek structured financial guidance to preserve and grow the newly acquired capital. Let us also be clear, there are already opportunists, scammers, and misinformation agents flooding the internet in light of this development. We urge every viewer to double-check their sources, avoid third-party brokers demanding upfront fees, and conduct any exchanges directly through verified banking channels. Please be advised that while numerous reports, customer testimonies, and internal sources have confirmed the $6.12 rate being honored at select Chase Bank branches, there has yet to be an official nationwide statement or press release from either the U.S. Treasury or Chase's Central Communications team.